it's Ty Crandall with Credit Suite here, and in this business loan broker training, we're going to dive in and talk a little bit more about the basics of SBA loans. So the one thing to know about SBA loans is they're obviously more difficult to qualify for than many types of financing that are available to loan brokers to offer to your borrowers. So for example, with SBA, they really need to have good credit, cash flow, and they also need to have collateral to offset the debt. So this starts with needing 2 to 3 years of personal and business financials, including tax returns. So one of the primary requirements is to have, in almost all cases, 3 years worth of tax returns to qualify for SBA. Now, what that means is it means borrowers that have been in business less than 3 years won't have those tax returns and therefore can't even apply. Now, you may find lenders that will go as little as 2 years, but it's typically going to be 3 years of business and personal tax returns required. So you need to have at least a business season for a few years to qualify. They're going to ask for P&Ls, balance sheets may also be required. Personal and business bank statements are going to be required as well. And the borrower is typically going to have collateral to offset the debt. Now, under SBA's underwriting guidelines require that the lender take all of the business assets as collateral, and if the business assets are not enough to cover the loan amount, then the lender is required to go after personal assets as collateral, even including the borrower's home being used to collateralize the debt. Now, positive financials that show growth and increasing net profits is what they're going to want to see. Now, again, when we're looking at term loans, when we're looking at alternative lend SBA, and when we're looking at SBA, when they're looking at tax returns in general, what they're typically looking for is two things. They want to see an increase in revenue. They want to see sales increasing from year to year. That's signs of a healthy business that's growing. And they also want to see that profits, that net profits are increasing too, that the borrower's not showing a loss, that they go from showing a profit, and that profit is increasing from year to year as well. Lenders want to see the use of funds make sense as well. What is a borrower going to use the money for? And is that money going to generate more revenue and profit for the business? Now, as I mentioned, good credit is required. So SBA says you have to have a 620 FICO score, but we found it's really more like excellent credit of 700 FICO score or more. As a matter of fact, SBA refers to this as, on their website, as a borrower needs to address any quote unquote blemishes on their credit report. So if you think of what a blemish on a credit report means, SBA is pretty much saying don't even bother to apply if you have negative derogatory items on the credit report, especially if it's on major bank credit. So we've seen borrowers with 780 credit scores get denied because of one late payment on a Bank of America account because, again, it's from a major bank, for example. So they've got to have established business credit as well, because SBA requires an SBSS, which is the small business FICO score offered by FICO, of 140 or higher. And a borrower that does not have business credit cannot have an SBSS score of 140 or higher, because SBSS is primarily driven based on business credit scores and also takes into account consumer credit. So again, they've got to have established business credit to have a FICO SBSS score high enough to qualify, and they also need to have good bank credit. This is the third type of credit that many borrowers don't know about. This is the scoring system that's used in the banking system, and in order to have a low 5 rating, the bare minimum to get a loan from a bank, they're going to have an average balance of at least $10,000 in the bank account over 90 days, or they wouldn't have a bank rating even high enough to qualify for financing with that bank. Now, SBA also offers credit lines. Per them, CAP lines is the umbrella program under which SBA helps business owners meet short-term and cyclical working capital needs. These are also available up to $5 million, and loan qualification requirements are the same as the loans that I just discussed. Now, there's several different credit lines available, including a seasonal line, which basically has to do with seasonal businesses. This is what seasonal businesses can use to carry themselves through slower times. There's a contract line, which is often used by contractors dealing with construction projects because they're involved with construction, which means that it can take them considerable time to get paid. There's even a builder's line, which is similar, which is for general contractors or builders, where again, they're building homes, but sometimes can wait many months to actually earn their money. Now, there are standard asset based lines, and there's another one, which is the small asset based line, which is the same thing, but smaller loan amounts. And these are for businesses unable to meet credit standards associated with long-term credit, okay, and financing for cyclical growth, recurring and or short-term needs. And again, there's also a small asset baseline, which is the same thing, but just a little bit smaller. So SBA loans, we didn't really dive in and talk a little bit in this video about 7A loans, which are typically used for general purpose. The borrower can use it for regular things that they're using to grow the business, such as increasing advertising spend. And then you've got SBA 504 loans, which really have to do with the purchase of real estate and equipment. So very specific on the purpose of those those loans. SBA even offers microloans for startups, which we've addressed in other training, where they can get loans up to about $35,000. So and don't have to have all the establishment that they have to have for their regular loans that they actually back and guarantee. So SBA loans, great opportunity for borrowers to get long-term, low-rate financing, but it's only going to work if they have the cash flow, the credit, and collateral. So these are usually borrowers that have well-established businesses that have been operating for 3 years or more and have kind of all their ducks in a row, per se, on the personal side and the business side, as well as having the assets to offset the lender's risk. So great way to go if you want more information on the other programs that are available for you as loan broker to offer to your borrowers, and get in touch with us. 877-600-2487, info@creditsuite.com. Don't forget, we have a lot of training on our YouTube channel at youtube.com/creditsuite, and grab your free training as well on our website at creditsuite.com/loan broker.